The information provided on this podcast is intended to be educational and informational only and is not considered to be formal legal advice. The listener should not take or refrain from taking action based on its content. Any listener in need of legal opinion upon which to rely in decision-making should consider formally engaging an attorney to review relevant facts in detail and examine the pertinent law as it applies to those facts.
Welcome to Real Estate Milestones, where we explore fascinating topics in commercial real estate with knowledgeable industry experts. I'm your host, Ben Malech, and I'm a young real estate professional who is passionate about adding value to people's lives through the incredible power of real estate. My goal is to help you discover what the heck is going on in the industry and how you can get involved. This is Real Estate Milestones, where your future in real estate lies just around the corner.
Hello, everyone. This is Ben Malech coming from New Orleans. This is the first podcast episode recorded in New Orleans. Today we have Dan Kryzanowski, and he's an active capital raiser, equity owner, and passive investor, generating double-digit yields and lower taxes via commercial real estate. Dan's investment portfolio includes 2,600 plus storage units and 1,500 plus multifamily doors and dozens of industrial, infrastructure, and residential properties. Dan has personally raised millions of dollars for accredited investors and family offices and empowered his partners to raise seven figures on multiple occasions. Dan is the founding vice president at Rocket Dollar, unlocking the 10 trillion pool of untapped retirement assets for the alternative investment community. He previously led the commercial real estate initiatives for GE Capital in Mexico and South America. Dan's superpowers include self-storage, self-directed IRAs, solo 401ks, SDIRAs, and Scranton, PA. So Dan, you started your journey from Wall Street, and could you tell me how you come to this field from there?
Yeah, and first, thank you for the kind intro. Great to be back in New Orleans. It's one of the few days it's not sunny in Austin, Texas, so I'm inside, and as a thank to you, I'm wearing hopefully the Tulane green, which is, there you go, beautiful. We match. I knew it happened. So, yeah, I grew up in Scranton, PA, and just, I think right place, right time. My math is simple. I finished UPenn in the class of 2000, so my only political bite I'll share is that I grew up on the same Little League field as Biden, and then I rode with Trump Jr. at UPenn. So, I don't think any of us are in the Olympics, I'll put it that way, but we all have had interesting sort of careers. With that as a background, for me, real simple, graduating in 2000, highlight, of course, was doing Mardi Gras my senior year. So thank you all for that. And I, Merrill Lynch, very common. I was on the trading desk, preferred that to banking, enjoyed, frankly, a life in New York City during those times. My product, I joke, if I did what I did on the debt side, we'd be on my island right now. But, my product slowly became commoditized. So, I guess what they say, good for the soul, not the pocketbook, because it would have been a serious contributor to the financial crisis. With that, trading is such a unique sort of animal, but it doesn't really give you the broad insight for what's going on, at least, picking up Barron's or the Wall Street Journal. And at the time, once again, mid-2000s, GE was still the top company in the world, which might be tough for you and your generation to believe, but it was. And I had a great experience kind of at the tail end of the Six Sigma, the beginning of the, I would say the newer GE and kind of what it became with all the spinoffs, but great experience that took me through the Americas, learning something as close to warehousing and storage that I tend to focus on, I'm interested in today. And, finally, where did it lead me after about 30 plus years of life? Well, in Connecticut, either doing the short commute or reverse commute with an 8-month winter and everything else. And, being that I had a taste of Austin before, I had that gut feel to say, let's check it out again. And came down on a weekend in March and, gave GE my notice. And that what I would say, going back over 10 years now, was the beginning to my entrepreneurial journey.
Yeah, awesome. And I really love Austin. That's I think that's the only place in Texas that I've gotten a pleasure to go so far. And beautiful, super quirky and fun city. So I recommend it. Before we get into your real estate milestones, I'd like to ask about your first investment, or your first alternative investment rather. So yeah, I mean, Yeah, let's hear about it.
As I have a little Darth Vader, so I'm here at Capital Factory, the home of Austin startups, and this was printed on a nice little 3D thing. So, but this is kind of the sign of how good my initial investments went. I went with my father, and we could have choose Yahoo in the mid '90s. We choose Service Merchandise, which I joke even Radio Shack had a good commercial, I think, a few years later. But my first alt investment was actually a comedy tour. So you guys can all laugh with me because I remember sitting there with my wife and saying, "Hey, sweetheart, these might be $1,000 tickets, AKA this might be a write-off." And, lo and behold, that's what happened. It seemed great at the time. We had a great time, but it was not, when I'm looking back now, it wasn't asset-based, such as real estate, and there really wasn't a team, much like you'd see in the startup world per se. So, like anything, when you have an interest, I like to use the analogy like versus trust. It's great to have a bunch of likes, but trust is when the money moves. And I think similar to when you have an interest or when you really want to get your feet wet, when the money moves, you take it a lot more seriously. So with that, it was a real world MBA. As I say, fortunately, that was not that big. And I had a similar one in real estate a few years later. But sometimes that's the part of it. I think now it's especially, Ben, we were at the same place this past weekend. There's great mentorship. There's a lot of that wasn't out there. I mean, my first alt investment was even before the Jobs Act, before crowdfunding. So, but at the same time, great learnings to have. And I feel now, in hindsight, I've, maybe 5 or 10 years above folks coming on the scene now.
Yeah, just to mention what he was mentioning, we were at IREC, or the Intelligent Investors Real Estate Conference. So shout out to Hunter and everyone who made that a great experience. And met a lot of great people like Dan, and I'm excited to bring a bunch of them onto the show in the near future. So Dan, what was your first milestone in real estate?
Yeah, this is a good one. And I think, I know there's a lot of your peers listening, and, maybe some folks that have been corporate that finally after 20, 25, 30 years are thinking of stepping out. I was co-best men in a wedding for all the Pete Davidson fans out there. This was on Staten Island. It was the coldest day and shortest day of the year. The other gentleman that I didn't meet, but I wore a little powder blue because he was a North Carolina guy, and asked him what he did. And he said, flip houses. I said, yeah, okay. He said 15%. Well, my ears really perked up. And then he said, did you know you can use your retirement dollars? And for me, this is kind of when, the big light bulb went off. So, in short, like anything, and I did my diligence, put a relatively, I'd say, smaller check, but in short time, it paid off. And then thereafter, I had another check, and then I talked to my family. So the proof point was there, and I appreciate investments that could show that, particularly to initial investors, whether it's the first, ideally in the first month or 3 months, to show that you get that return, not just of capital, but also of interest, which is fantastic. So that was my first experience. And it actually kind of concurrently led me to the self-directed world. I know a lot of folks, it's usually you hear of an investment, you invest for a while. Maybe folks of your generation are coming through crowdfunding multiple years. I had the benefit of having what I consider a good decade plus of IRA money that, frankly, I did not want out in the Fidelity Year 2050 fund. I felt there was much more, A, return that I can do myself, even in a bullish stock market, which I found true. And then B, in some aspects that you're greatly impacting and benefiting smaller entrepreneurs and those in your community.
Yeah, that's awesome. And I really like that. Before we get into a little bit more about the self-directed IRA, I wanted to know what your most recent milestone in real estate was.
Yeah, this is a good one. So when I came to Austin, the second company I was with was called Sparefoot. Great founders, great story. It was actually, as I said, in Capital Factory, I'd say the first big win of Capital Factory. And even then I had a little bit of gray hair. So I was brought on to stand up our account management division. The net benefit here was there was 4 publicly traded REITs at the time in the next top 100. I really got to know all the all the CXOs, CEOs, CMOs, COs in the space. And coincidentally, who I felt were best to breed on the operation marketing side, they went on their own about 6 years ago. Fast forward to the end of 2021, a gentleman who I consider a good friend and mentor, he sold a fair amount of his portfolio for 9 figures. So what was great about that? Yes, obviously, as I said, the whole like versus trust. There was a lot of trust from day one. I was in deal 1, deal 2, deal 3. And why that was nice, because deals 7, 8, 9, 10 down the road, you and other folks probably didn't hear it because it was one text message, one email. And I share that as a side note with any who you feel is a top sponsor, best of breed in terms of competency, character, real estate shops. There is a benefit of putting, a chip in early, so you're part of the members only club, and that's the way it works. To be honest with you. The other thing too, which is great, is I was able to evangelize storage. I know it's kind of front page, the new sexy thing, but it wasn't, especially 5, 8 years ago. I find it fascinating. I know for some folks it's like Legos where you put your crap, as my mom would say, but in reality, we can talk more on later. I do think it's a real dynamic asset class. But final point, which I think is because of just sharing my story. Picture if you and I were talking 5 years ago, a gentleman, early in his career, invested in one of these properties based on what I shared about my relationship, not just my returns. And this deal went 3x in about 2 years. Not saying every deal does that, but the net benefit here was that he was able to put on a down payment for a house. Much easier said than done in Austin, especially early in your career, strictly based off of this investment. So for me, and there's been many stories like that within this sort of broad relationship and this portfolio sale over time that has really impacted folks' lives.
Yeah, that's really awesome and super powerful. And I would love to get into more of that. I mean, I guess we've heard a little bit about self-storage this weekend, and I've read a lot of the news articles, and I'm super into real estate, so I read about as many alternative investments as I can. But something that really stuck with me was that you get really fast turnover in terms of increasing rent. So it's a kind of a good play, or it could be a good play, inflationary environment. Can you tell me a little bit more about that? Do you share that opinion?
Yeah, I mean, storage, even let's assume, 40% of the world's money was not printed the last 2 years. There was no global pandemic, et cetera, et cetera. Stock markets even went up and down kind of on a normalish basis instead of a big bull market. Even with that, or AKA, let's rewind, 8 to 10 years or even 15 years before that, 1 out of 10 Americans were using storage or have touch storage. And that number is probably 1 of 8, maybe 1 of 6, 1 of 7 in certain submarkets. Because of that, a lot of us have consumed storage. Why is that? Some of it you can say was just the American culture. I have my bikes back from 1980. It's funny. Some of the guys who are the meccas in storage just say, be smart with your money, et cetera. I like to joke, but you still have your dirt bikes in Arizona from 1982 and same storage place for 40 years. So there's stories like that. There's other great things, for my friends from New York City. I think you take, the 456 train up there in the Bronx, and I'm not joking when I think there were some Picassos in storage sitting there, when I toured, and this was one of our clients at the time. So those are just some fun things. But I think fast forward to the reality we have today, and this will be relevant, especially, Ben, as you and your colleagues graduate, is that, do you want to feel like a hoarder? No, you want your space. You want to, kind of look clean and crisp, but you also need stuff, not just stuff that you would want, but need. So, great analogy. I call it the skis versus the snowboard. And then as you get older, it's the Christmas tree or the Hanukkah tree versus, pick whatever you want to throw out there in the summer. But also what I'm seeing is essentials. So not just stuff that you want, it's stuff that you need. What do I mean by that? Your tax forms, your children's winter clothes. So I do think, and no surprise, the residential market probably better than me, is that extra bedroom, whether you're renting or buying, is probably going to cost you at least $1,000 a month. Whereas a storage unit or upgrading your storage for more size is probably going to be 50 or 100. So I think that delta alone, being that so many, let's just say 1 out of 10 folks have touch storage, now that they truly need it, I do think there's some meat on the bone still in storage.
Yeah, I think that's an incredible point, especially if rents are going to keep rising and housing prices are going to keep rising. And, people can no longer afford to just have an extra bedroom to keep their stuff, where maybe they want to downsize to a 1 bedroom from a 2 bedroom and put the stuff they were storing in that second bedroom into storage for maybe even a what sounds like you're saying like a tenth the rent per month.
Yeah, and I think your parents' generation, probably closer in age to me. COVID's a great example where folks want that permanent office space, or that bedroom is now permanently something else, or it is going to be a permanent guest room that you can't just use it as a storage space, basically. So with that, I do think there's more of a need. And a final point with people coming to the Sun Belt, even if you live in a nice Class A multifamily renting, the storage units they have on site, there's not too many. I mean, at best case, you'll say maybe 20, and these are your typical high doors for 400 units, and they're not air conditioned. And as you know, in the South, things get a little sticky a little quick. So paying for that AC is a pretty good benefit. And most things that are newly developed in storage, especially in the South, are going to be air conditioning.
Yeah, definitely. That sounds good. New Orleans is pretty hot, so I know what you're saying. So I want to talk a little bit about self-directed IRAs. I mean, I've heard of IRAs for a long time since everyone's like got a plan for retirement, make sure there's you have a plan for going forward. But I'm 20, and I'm sure even people who are a little older than me are still at the beginning of their planning in terms of their real estate and their investments and whatnot. So I wanted to have a two-part question. So first of all, what are some of the advantages of a self-directed IRA over some of the traditional things that people are quite familiar with? And also, what should I be thinking about as someone at the beginning in terms of knowing that I want to be in some alternative investments in the future? How should I go forward to kind of plan to make sure I'm able to invest in real estate and syndications and things in the future?
Yeah, I mean, these are dynamite questions. And for folks here, I'll touch on a few things that I know is going to resonate. We might not get into the deepest detail on all of them. So, friends that are listening, and thank you for your time, please reach out to me directly on LinkedIn. Mention that you heard it, with Ben and myself today, which will give me some great context. So high level, self-directed IRAs. First, I'll preface they're legal. They've been around from the 70s. When you get to know them, it's kind of like me. When you get to know them, you kind of like them. But, a little old, little stodgy, wasn't really country club cool to talk about. I'll put it that way. Now, that said, the great advantage, I preface all that a little tongue in cheek, is because a fair number of politicians and stuff, I'd say, you're great. One of our avatars, the Midwest Doctor, has taken great advantage of this as a passive investor, whether it's into land, a rental house. I think the simple thing for this audience is going to be your multifamily syndication is something that's going to resonate with them, which could also be storage, industrial, you name it. But I'd say, particularly for your parents' friends and say our gray hair generation on the call here, Gen Xers and above, it is very likely, as I shared my career story, that we worked corporate, maybe much longer than we wanted to, but a decade, 2 decades. For folks in the military, they had a TSP beforehand. I share all this because your old 401ks, I say that generically, your TSP, et cetera, any and all of these accounts can be rolled into a self-directed IRA. And it's capital S, capital D, not because you're self-directing and your W-2 jobs portal and you have 10 choices. This is where the world is really open to you. And I do want to take a moment to highlight what you cannot do. It's kind of nice, the IRS. So no life insurance, no collectibles. And the big thing is not yourself or your linear family. So Ben, this is a great example where, for example, your dad could not buy a flat that you would live at during your time at Tulane. Or, when you have your great startup ID, unfortunately, they would not be able to put in there. So those are just in this linear, kids, parents, grandparents, oddly enough, brothers and sisters are not, but you can't give your brother and sister a sweetheart deal vis-a-vis other investors. So that's just a very high level of how this works. And I would say most folks, particularly 40 and above, you should at least be aware, and B, I would consider it. And a final point why, particularly if you're in the typical 60-40 stock bond, let's say for our listeners out there that are 40, your 40% in bonds is basically making zero. And that's not even, we won't even go into inflation now. Whereas Ben, as you shared with the audience before, there's many real estate that just from the pref alone is going to be 6 to 8%. So, in terms of just allocation, there's some benefit there. If you think real estate's less risky than stocks, you're even reducing your risk. All of this can be done. I just want to reiterate for folks, it's been around forever. It's legal. It's based, a lot of politicians have a self-directed IRA. It's probably not going anywhere. It's something that I would strongly suggest looking into. For education alone, I'm sure this will be in the call notes, but rocketdollar.com/learn is a great way to learn about this.
Yeah, and I'm definitely super interested in this idea and in self-directed IRAs because I'm on the stock market and it's kind of hard to sleep at night sometimes nowadays. And I really just I don't need to chase 20x every year returns like how I've been pretty fortunate in Tesla in the past few years, but no complaints there. But I'd be perfectly satisfied with 15% a year for the rest of my life, and that would be plenty. And probably by 40, I won't even need to work. Just having a good investment with someone I trust like that. I definitely want to work, but I'm not saying that that's my goal is not to work. But there's a lot of options in real estate, and I think it's overlooked by some people who there might not be savvy investors and might be more focused on their income that they're working for. But there's a lot of options out there for people who
I want to build on your second question, which I think resonates, particularly for folks coming out of school that may be self-employed or choose to be self-employed, meaning you have a 1099, you're your own one man or one woman shop out there, or for couples that get married early, you get married without W-2s in your business. And there's something called the solo 401k, also known as the individual 401k. Why I like this, regardless of your age and your sphere, is the tremendous benefits you get. So right off the bat, and Ben, let's assume as you guys are all rocks, let's say your realtor rock stars out here, but what a lot of folks don't know, there's 1.3 million realtors in the US and growing. Everyone is a 1099, or the structure is common, a 1099. What does that mean? Is that you are self-employed. So right off the bat, much like your W-2 friends, you can contribute $19,500. If you're over 50, add 6,000 to that. Okay, so right now you're basically on par with your buddy that works for, I'll say Dell. I'm here in Austin with that 19.5. Your buddy at Dell, at least in terms of his work, he's not contributing anymore. He's going to pay taxes on the rest of that. And he's probably making, let's say 200K at Dell, so he's not going to qualify for a Roth. He can still put 6 or 7K in an IRA or self-directed IRA, but he's capped there. Whereas in the solo 401k land, you have the 19.5. In addition, you can do 20% of your net earnings. So let's say basic example, realtor makes 100K, the 19.5, 20% of the 100 is 20, roughly 40,000 there. You're contributing, you're lowering your tax basis. Your AGI goes from 100 to 60 in our very basic example here to pay taxes on. Now, let's say you have a rock star year. Let's say our young couple, right off the bat, many folks, that 19.5 times 2, the first 39,000. And then, realtors can have some good years these times. Let's say they make 300,000-400,000. Based off this equation, you're looking at, anywhere kind of in the 120 range that you can lower the AGI by. So this is pretty powerful. And then once the account is funded, what can you do? Once again, passive investing. You want to go in Bitcoin, you can do that. You want to buy a smaller rental house, you can do that. Once again, you cannot stay in it. I'll caveat that. Your friend that you met at school lives overseas and has a startup in Mexico. You can invest in that. I just want to be clear, you can also invest internationally. For our older folks on the call, pass on grass, the De Niro line and Meet the Fockers. Cannabis is one thing that the plant itself, there hasn't been a federal sort of ruling. So a lot of companies in the self-directed world will, may not give the green light or may not support that sort of investment per se. But everything else is in play. And it's very powerful. Final thing I would say too, and this might be, much more impactful, I say about donating versus investing. Ben, as you guys graduate, your friends are going to have different, probably, one's going to open a brewery. Hey, that could be a 10Xer. At the same time, a loan, I have loans to female entrepreneurs, and I found it very impactful. Particularly, as I said, the whole donation versus investing, I find it much more impacting to invest, say, on the other side of the tracks, because what you see is that money that gets, kind of recycled 3, 4, 5 times over. Now, once again, I might not have this money liquid, even if I'm 40 something years old. My guess is a lot of your parents, friends listening on the call probably have a bunch of kids at Tulane. I went to UPenn, elsewhere. Liquidity might not be the bucket they can tap into, but from working at, say, a GE for 30 years, they can tap into that, and they can roll that, being that they're self-employed now, into a solo 401k. That's the way that this whole world sort of works. And final point I'll share is, with either of these accounts, whenever you open them, however you fund them, you're still maintaining all the tax benefits of a pre-tax traditional or a Roth, which, Peter Thiel jokes aside, you're paying on the little seed and not, the big tree of what it could become.
Yeah, definitely. That sounds very awesome. And I guess, I don't know if you can get too much into this, but something that I've just been curious is, I've been hearing about the Roth conversion. I know a lot of people might have some, regular traditional IRAs, and trying to explain to my mom what the Roth conversion was, and it wasn't really catching because I'm no expert. But I know that when you get into a Roth, that you pay the tax up front and not later. But I know if you're in real estate, there's other ways to reduce your income. So when you go into the Roth, there's not you don't even have to pay any taxes from the offsets of your gains. So I know the strategies like that, but can you just briefly give us a little bit about
Sure.
that?
Yeah. So high level, you did share well, is the Roth is post-tax money. So the way I like to say it at the, I feel the most broadest basic level is, the IRS will take your money sooner than later if you want it to give to the IRS. Okay. How can you do that? Once again, if you're under a certain income level, the 6-ish, maybe 7 a year you can do. But, talking in some of these larger numbers, I think what folks want is a Roth conversion, which is different than contributing. Now, the contributing, once again, is the single digits. The conversion at the moment, and there's been different discussions, when your account hits 10 million or 5 million. But, for most folks, I think listening here, let's say you have a $500,000, you worked at GE or big company all these years. You feel really good about, Ben, your first deal that you're going to bring, so I want to pay on the 100K today, not, the $1 million this will become in 20 years. I can do that conversion within a solo 401k. It's literally a click of the button. It goes from a checking account that's in your pre-tax into your post-tax. Now, come tax time, your AGI, you are going to pay up on that extra sort of 100K. Very similar, you can do that in a self-directed IRA land. There's a pre-tax and a post-tax IRA, 2 unique accounts, but you can do that conversion. In terms of backdoor Roth and such, I that might be for a different call to go into deeper, and I would refer folks to the Rocket Dollar knowledge base. But yeah, in short, like anything, as you do have a fair amount of money and consistent cash flow coming in, you could be a little creative on ways to do it, especially if you're tied in with a charity or of interest. I call it very generically the triple trust. But some of my colleagues out there that are highly sophisticated in this, look to bring your tax percentage rate sub 10%. Now, that's it. It goes through a few trusts, a few other things. One of it is charity based, but for some folks that falls into kind of their strategy and their mindset and what they want to do with their money and their time. But bringing it back to elementary once again, it's the conversion is great because you can, as much or as little as you want to pay on this year, effectively you could up your AGI, and then on the back end when you take it out, there's no taxes.
Yeah, great. I appreciate that that explanation, and I'm sure people will want to learn more in some more detail. So it's a good start. And before we get into our lightning round, I wanted to just see, since you're I think that you're an expert in alternative investing and in real estate. I'm not sure if you I think that you might consider yourself one too, but if you could tell us a few trends that you are thinking about going into 2022, what you think might be where we might be going in terms of different investments in maybe some of the more niche real estate.
Sure. Till the day I die or until proven otherwise, I will always consider self-storage a solid asset. And I'm not saying that a blanket statement, but in certain submarkets with certain operators, absolutely. I think industrial, particularly here in Texas, because I see it every day, And I know industrial is a little tougher to picture, but as you referred to earlier, it's your last mile, it's your distribution centers. I can also spread it out to see, where they make the widget, an industrial park campus. Think of one of the properties that we have is I call it a mini Fort Knox that's on the El Paso border, and there's billions of dollars inside. It's Department of Defense certified. And then on the flip side of that, a showroom where the tradesmen are going to go, not like a Home Depot, but a true where folks that are in the trade looking, purchasing big, bulky, call it ugly, call it for what it is. But there's a lot of opportunity. There's a lot more growing there. As we move more to a last mile sort of world, I think that's going to be extremely helpful. Separately, just for fun, I said I'm Beautiful Capital Factory here. I do about 50 mentor calls a year. One thing, and this actually came at my last call, pre-Christmas, as I say, and natural disasters. And I share this at a family office show. I'm not being political in any way, shape, or form, but they do occur. I don't know why or how or how many more, this and that. But I think one thing both sides of the aisle could think to is, is there a better sort of potentially more comfortable response, both for disasters? You can argue some of our military bases, and there's a gentleman here that I spoke with, and the best as I can say is instead of just a big metal container that people might have to live in or do stuff, and it's it's big, it's bulky, it's tough to get there. Almost picture like you're in a video game that something can come with a drone, go. It feels like you're in a smart home. There's a lot of, I think, upside as things go. So that's just an example. So I do share with folks, to have the liberty of time and do mentor and such. I always find it more exciting myself. I'd love to give advice, but also knowing that a check could be written. For me, I think that's, gives me a little credibility as a well-rounded alternative investor.
Yeah, awesome. And another one that I'm hoping to bring an expert on this on a show soon. But my parents got an RV, or my mom has an RV, and I know that there's a lot of trends going there in the real estate side with some storage and whatnot. Have you thought about that at all?
Yeah, so it's funny with even pre-COVID with RV parks. As I said, every deal is a little bit different and situation is different. I do feel it's going to be commonplace. I know one buddy, he had a tough time making it profitable. So one thing I would say, you can see this down to the residential, is folks, particularly say if it's your first duplex, fourplex, you're going to want to manage it yourself, et cetera. That's great. You're going to learn a lot, but it might not be super profitable. And then when you're getting something like RV parks, storage, et cetera, I always remind folks to think of the bistro versus restaurant analogy. What do I mean? Well, the bistro only has so many tables, you know what I mean? And most likely you're the owner, you're going to enjoy being there, et cetera. Whereas the restaurant is, a whole lot of chairs or a lot more tickets per day that comes through. So I share that because, and in many instances, payroll is the largest for either scenario. So, and I think if you're coming new to RV or any of these asset classes for the first time, it's a delicate balance of how big do I go without having the personal experience or knowing who to hire. And if you go too small, you're the one working for $10 an hour. If you go too big, it's like going to the largest poker table in Vegas. You're like, oh boy, like I can only hand a few hands and I better win one of them up here, so I can play a little bit longer.
Yeah, that's a good analogy. I'm sure a lot of us will love that. So let's go into the lightning round. Right. Cool. So if you could have any superpower, what would you want?
That everybody would be bluntly honest and empathetic that I talk to.
Nice. Cool. That's a new one. I got a lot of super speed and then super and flying, but perfect. So what's your favorite book, or what's the one that's helped you most in your career or your life?
Oh boy. I read actually 3 books on the flight home yesterday, and the one was so good that I can't, of course, remember the title.
It happens.
Right now, because this was kind of a good one. Because this was shared, and I did sneak and read in the Kindle, Getting the Money, the simple system for getting private money for your real estate deals by Susan Lassiter-Lyons, was recommended by a few folks on stage this week, and I did sneak a few chapters in the Kindle.
So what motivates you each day?
Yeah, I mean, I'm a father. My son is fantastic. I think as a parent, yes, you do need the basics of food and shelter, but also of opportunity. I'm not meaning, to buy things that we have to put in self-storage, but legitimate, opportunity, and also being wise enough for your time for experience. So, right, my thing with my son is big into experiential things that we can do together that's age appropriate over time. And to the extent that he can set the agenda, and even though he's still 5, have, some awareness of, the budget or what it goes in for a small bit. So he loves pho, the soup, the Vietnamese soup, kind of who's the people, what goes into it, all of it. And he has a lot of great questions from that. So it's fun.
Yeah, that's really awesome. I love that. I love pho too. So what advice would you give to someone who wants to follow in your footsteps?
Just do it. Between liking and trusting, it's and I shared this earlier in the call, or being interested in something and experience it, money's going to move. And I think particularly there's a great benefit now to, much like my comedy tour, which I didn't know at the time, that you can put a little and learn a lot. And, for my left brain folks out there, particularly if you're a bit older, it's choosing to be stuck in a CD or a bond fund versus in real estate, that legitimately, especially if you're strictly W-2, could mean a few more years that you're working versus retirement. So I do think it's a serious thing to, if you are going to get into it, consider. If not, then you know what, don't, and gain all that time back for your headspace and everything else you want to do with yourself.
Yeah, I mean, I agree. And I think even if you think some of the 50% IRRs are, how could that even be possible? There's things that are 6% that people can tell you with pretty high confidence that, you will be getting this, and the risk is fairly low, and it's even better than keeping your money tied up in a bank, especially in inflationary time. So yeah, that's a good point. And since I put you on the spot with these lightning round questions, I want to give you a chance for revenge. So feel free to ask me anything you'd want to know about me.
Ooh, okay. So what are you going to do when you graduate? Meaning like the first few weeks after. What's your graduation party?
My graduation party?
Yeah.
Well, I'm hoping to have I don't think I'm going to stay in New Orleans for the rest of my life, but I really enjoy being here now. So I'd love to have everyone who I love come down and spend some last times in New Orleans with me. And I think that would be pretty fun and a good time to commemorate my journey here so far.
All right, meditation or yoga?
I don't do yoga. I don't really have like a meditation regime, but I realize that I do actually spend a lot of time meditating. It's not, I don't do any like certain breathing exercises, but I like to, take a second and try to be the consciousness that I am, try to like get out of the internal head and just, experience life in pure existence as much as I can. So I don't know if that made sense, and I'm new to on this journey, but yeah, I like that.
Final one for you. Do you feel that your generation is going to travel internationally as much as, say, myself and your parents did, or really just hone roots and stick to the USA?
Well, I do think that we're going to travel internationally. I might be biased. I just spent my last 4 months of last year in Copenhagen, and also went around to maybe 10 different cities across Europe. So seeing different cultures and even immersing in Denmark, like I love the US and couldn't imagine anything better. And Denmark is different and it's better in a lot of ways. Some ways it's not, exactly what I want, but like there are places out there that are, better for different reasons for different people. And I encourage anyone to try different cultures and immerse and learn from them, because I'm a different person before I went to Europe. And what I've taken away is going to change the trajectory of my life for the better. And I know that for a fact. So I definitely think that we should travel internationally. And I don't know who doesn't want to go skiing in the Alps. So I think we will.
Awesome. I love your answer. And I hope folks listening here, consider it. At all ages too. I definitely think there's tremendous benefit. So thank you for sharing.
Great. Well, Dan, how can people reach out to you or find more information about you?
Yeah, so LinkedIn is probably best, and please share that you heard it today with Ben and myself. A few things that may go in the call notes. I used to joke, if you can spell it, you can get it. If you feel compelled for Rocket Dollar account, D Kryzanowski, it'll be 12 letters. That'll get you, the max discount. And I said rocketdollar.com/learn is just a great base of everything self-directed. And I know we talked a lot on storage. Folks can ping me. I said there's also some good stuff on the industrial side too. So if that's of interest, let me know.
Great. Well, I encourage everyone to reach out if they're interested. And it's a lot of good knowledge to be had. And Dan, it was a pleasure to meet you this weekend. I'm glad we got to do this so quickly. And I look forward to a long friendship with you and chatting many times in the future. So thanks for coming onto the show. And everyone, thanks for spending your time with us.
Here we go.
All right, great. Bye-bye.